Charlotte Works is the workforce development board serving Mecklenburg County and your source for the latest labor market news. Is a recession imminent? And what does that mean for job seekers and businesses alike? So since late last year, you may have heard some increased talk around a recession being imminent and businesses scaling back on hiring and preparing for this likely recession. And that is due in large part to one of those key indicators that has been a reliable predictor of recessions in the past is the yield curve. And not to get too technical on the treasury yield curve in this video, but since late last year, we've seen an inversion of that, which often signals that a recession is likely within a year to 18 months. So again, there's not a hard timeline on when that recession will be likely to happen, but it really indicates one of two possible outcomes. Either a soft landing for the economy, that there will be a little bit of job loss as we go through this adjustment of interest rates, or it could be a deep and painful recession. And so what I want to talk about today is, what does that look like? What's changed since the end of 2022? What are we seeing in the jobs numbers that may indicate one way or another, and how we might come out of this inverted yield curve? And so I'll go ahead and jump into that today. So again, not to get too technical, but I did just want to show the yield curve rates from the Treasury so that you know what we're talking about when we're talking about this inverted yield curve. What I'm looking at here is, you see since January, you see that 1 month interest rate is 4.17%. And you contrast that with the 10, 20, and 30-year interest rates here. Those interest rates are lower. So again, that indicates that investors likely to believe that interest rates will be reduced in the future. And you can even see since January that it continued to widen, with that short-term interest rate being rising up to almost 5%. And that 30-year interest rate also really holding about where it was in January. There's some fluctuation. It was lower and still just under 4% here. So again, not going to spend too much time on the inverted yield curve, but that is the indicator we're referring to. And so the first thing I want to talk about is nationally. What does employment look like in the US today? So since we've seen this inverted yield curve, you may have seen a bunch of news articles about companies scaling back, doing hiring freezes, doing layoffs. And again, what that does track with what we're seeing nationally. We see the unemployment in the United States has increased pretty significantly since October. So we had about 5.6 million unemployed individuals in October of 2022. Today we're at 6.3. So the labor force is about the same. The employed total has gone down slightly, but we do see a larger increase in the number of unemployed individuals in the US. And then we'll zoom into what does that look like in Mecklenburg County. And so in Mecklenburg County, we really hit a high point in our labor force in July of 2022. Again, kind of an unprecedented high for us. We hadn't seen numbers like that. That's come down slightly. Mecklenburg County's unemployment rate, we don't have anything past December, but that unemployment rate was actually trending down in December. And so we've seen a little bit of contraction in terms of the labor force in Mecklenburg County, but we haven't quite seen the same jump in unemployment that we've seen nationally. You see, actually, the total number of unemployed individuals in Mecklenburg County has come down. Now, one place that we have seen some impact locally is in our local job postings. And so what I have here on the screen is the job postings between October of 2022 and February of this year. And so what you can see is, you can see pretty much across the board a rather precipitous drop in the number of postings for a lot of positions here. So you can see maintenance technicians, customer service representatives. The number of postings are down pretty substantially across the board. Registered nurses is up slightly, but that's very small, only 3% gain there. We do see service technicians with an increase, but again, we only have 393 jobs there, so that's not necessarily the type of occupation that you're going to see. You might see more variability with it. And so even if I were to expand this timeline, let's say we go back to April of 2022, you're still going to see that overall the job numbers really aren't increasing in the same way that they were. So again, you see that trend holds consistent, we're seeing a pretty sharp decline recently. So I'm going to move this back out to October, and then we'll move on to some other sections of this report here. One of the other things I wanted to look at here is what does that look like by company? So what companies are we seeing contractions with? Atrium Health, Randstad, Wells Fargo, Bank of America, really significant here. And so again, a lot of this tracks with what you've likely been hearing in the news, Lowe's, Truist Financial. If we look at that by industry, you can see mining, quarrying, oil, and gas extraction is actually up here locally, but agriculture, manufacturing, let's sort by the industries with the largest decline here. Finance and insurance, exactly what I was looking for there. We saw that from the companies as well, in the information industry, management, retail trade industries. And so one other thing for job seekers, if you're dealing with this reality, what do these job numbers indicate? Well, the job numbers indicate that, at least from a company perspective, a lot of companies are playing it conservatively right now. So that indicates that there's generally a more pessimistic sentiment from a lot of employers. That doesn't necessarily mean that there is going to be a harsher and longer recession. But again, that just generally means that the sentiment is to prepare for that likelihood. And so as a job seeker, what skills should you potentially be looking at? You see the same thing. Obviously, we've had a large dip in the number of job postings. So that's going to mean just overall decreased in demand for skills because there are fewer job postings. But what skills are really kind of actually increasing in demand right now? So maybe some more recession-proof skills in our market. We've actually seen a huge increase in demand for content management. Risk analytics makes a lot of sense, again, in the finance and insurance industries as they prepare for this likely recession, preparing for that risk. Supply and demand, process engineering, trying to become more efficient, franchising, behavioral health, and then some health skills here. Again, we saw that increase in job postings for registered nurses. So that's likely a lot of this healthcare industry, direct patient care skills right there. And so again, that's all I have for you today, but I just thought it'd be interesting to take this breakdown of what a recession might look like in Charlotte, and just to indicate that we are seeing some scaling back in job posting numbers. And so we'll see have to see what happens here over the next year, but just again, likely seeing some contraction in hiring and impacts on workforce because of this anticipated recession. For more information or for assistance as a business or a job seeker, visit charlotteworks.com.